Case in point 1-3, determine the impact on transactions. We will be following this example throughout our course. So in this example, we're going to determine which accounts have been impacted by each transaction and how much they have either increased or decreased. So in this case, Nathaniel will invest $35,000 to open Nathan's Donut School. So he's going to be investing cash. Cash is an asset. So our assets are going to increase by $35,000. Remember, we're talking about the accounting equation, and our accounting equation always has to balance. So Nathan put in $35,000 in cash. That's capital. So Nathan's capital account, which falls into owner's equity, will also increase by $35,000. So at the end, the company will have more money than it did before, and it will also have the owner's equity account increased. So using the accounting equation, assets have to equal liabilities plus owner's equity. Our accounting equation still balances. $35,000 equals $35,000. There was an increase on each side of the equation. And we have completed our first transaction determining the impact.